The FCA has moved tokenized funds deeper into the UK's existing fund regime rather than treating them as separate experiments. That is the important shift for compliance teams. FCA approves tokenized fund rules in a way that keeps investor protections, governance, and reporting responsibilities attached to the product. The point is not to loosen standards. It is to show firms how blockchain-enabled fund operations can fit inside the same regulatory perimeter as conventional funds. The confirmed baseline is the blueprint model. It allows onchain records to serve as the primary register for unit deals when appropriate resiliency plans are in place. A full off-chain duplicate is not automatically required. The framework has already been used to authorize the first tokenized UK UCITS, which matters because UCITS products sit inside a tightly regulated fund environment. The practical message is that DLT can be official record-keeping, but only with continuity and control standards. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The mechanism is controlled modernization. Authorized funds may use public DLT networks if the controls meet FCA standards. They may even issue units across multiple blockchains, as long as investor rights and charges remain consistent. That prevents a dangerous split where the same fund behaves differently depending on the chain used. In plain English, the technology can change, but the legal and economic treatment of investors cannot become fragmented. The affected side includes asset managers, custodians, administrators, and the vendors-ing tokenized fund infrastructure. They now have a clearer path, but also clearer obligations. Firms have to show governance, risk management, custody safeguards, information security, and data integrity. That raises the bar for tokenization providers. The product is not only a blockchain wrapper around fund units. It is a regulated operating model with audit trails, resilience plans, and investor protection duties. The open question is how far the roadmap goes. The current rule focuses on tokenized funds and register mechanics. Later stages include traditional securities moving on-chain and tokenized cash flows that could let investors hold assets in wallets while smart contracts handle administration. Digital cash and stablecoin settlement may be allowed through waivers, but that is not the same as blanket approval. The UK is creating a staged path, and the later stages still need policy detail. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. The next signal is live compliance execution. FCA approves tokenized rules, but the market still needs fund launches, resilience documentation, custody models, and settlement choices that work outside a pilot. Watch for waivers involving digital cash or stablecoins, plus future wholesale market DLT consultations. If firms can launch products while keeping rights, fees, reporting, and custody clean, the UK tokenization push becomes more than policy language. It becomes functioning market infrastructure.